Great, so welcome everyone. As we wait for others to join, please do take this opportunity to introduce yourself in the chat. Say your name, your organization and which country you're in. The slide deck in French, I've posted a link to it in the chat. If you click on that link, you should be able to download the slide deck in French so that you can see the slide translated and hopefully the words in French auto-translated, and that will help you. You are free to use the chat throughout the webinar today. When it comes to time for hearing from you with your comments and questions, please use the raise hand function, which you can find in reactions, and then we will unmute people and invite you to speak at that point. Please do feel free to share reactions, the happy faces and thumbs up and things like that as we go along generally, if you have any kind of response to what we're saying. Super. Right, so we are your hosts today. My name is Samantha Soke. I'm the IFR4NPO Project Director for Humentum, and I'm dialing in from Uganda, where I have lived for 20 years. And I'm delighted to be joined by my very wonderful colleague, Karen Sanderson, who is the IFR4NPO Project Director at CIPFA, the Chartered Institute of Public Finance and Accountancy, and she'll be taking us through the majority of our time together today. So today's webinar is all about exploring the concerns that stakeholders have expressed about using the International Financial Reporting Standard for small and medium entities as the basis for guidance for financial reporting for non-profit organizations, and how we plan to address those concerns. That's what's on the menu today. Here is our agenda. We're going to start with some brief context setting about the long-term goal of the project to frame the issues that might have brought you here today. We're then going to explain the approach that we're adopting and why, and hopefully answer those questions along the way. And we plan to have time at the end to answer other questions that you might have on the explanations that we've provided, and also to set out the next steps. So non-profit financial reporting standards exist in a few countries where they have had a huge impact on public confidence in the non-profit sector's credibility. Most countries lack sector-specific standards. So the goal of the IFR4NPO project is to develop internationally applicable guidance. And that will support the provision of harmonized, quality financial reports. Now note that our focus for this project is on general purpose financial statements and the accompanying narrative reports, rather than on project or donor specific reports that many NPOs also produce for their donors. It's our hope, our dream, that once the guidance is widely adopted by different jurisdictions and endorsed as best practice by donors, it will help build a more reliable and accountable, a resilient and accountable sector. And it will help level the playing field for access to funding, bringing more equity to the sector too. Now, we recognize the need for this guidance is urgent. It was really needed 10 years ago, but with limited time and resources, we have made some strategic decisions to focus our efforts. Right now, we are not attempting to solve all of the financial reporting issues experienced by NPOs, but we can make a significant impact by focusing on those issues that are most commonly experienced by NPOs around the world. As you've heard, the objective of the project is to provide guidance that is internationally applicable and can address known problems in NPO financial reporting. So we have three objectives in developing this guidance. You see everything there? Yes, okay. So the first guidance, the first objective is concerned with improving the quality, transparency and credibility of financial reports from non-profit organizations with international high quality guidance that is relevant no matter where you are in the world. The second objective is about providing information that's useful to users of financial reports for accountability and decision making. And in doing so, balancing the needs of preparers and users. And the final objective is around addressing the accounting issues that are specific to the non-profit organizations to promote accountability. So all the proposals for the development of the guidance are made with these three objectives in mind. Now, in terms of this being a long-term journey, it started in 2014 or even before, long before the formal launch of this project in 2019. We've been mobilizing the NPO community and the sector community, sector stakeholders across the world to create fit-for-purpose guidance that helps with the biggest issues. For stage one, we plan to issue the guidance, and that guidance will be called INPAG, International Non-Profit Accounting Guidance, and that's hoped to be issued in 2025. So it's our hope that this guidance will be the starting point for a more expanded set of guidance on all NPO issues, which will lead to sector-specific financial reporting standards for NPOs. We're creating a movement, and with your input, we're creating a voice for NPO financial reporting issues. That's INPAG, International Non-Profit Accounting Guidance. Now, this stage of the project, stage one, if you like, is being delivered in 3 phases, consistent with the processes used in all international accounting standards setting. We completed the first phase with the publication of the consultation paper at the end of January 21, and the response to that was published in early February this year. We're now moving to the development phase with the creation of exposure drafts, that is, drafts of the guidance that we intend to publish for comment. And we'll be inviting stakeholders to attend focus groups during the development phase. And we will be prioritizing respondents to the consultation and those directly engaging with the project for these groups. Now, as with the consultation paper, we'll be seeking comments and input to the exposure drafts to help us develop guidance in the final phase of the project. Now, there are a few acronyms that get used a lot in the world of accounting standards. Here are some of the common ones that we will use today. We won't go through these in detail now, but I am going to post these acronyms and their meanings in the chat shortly when I hand over to Karen, so that you can refer to them. Now, the main subject of our webinar today is to explore this issue of using IFRS for SME as a foundational framework for the INPAG guidance that we're developing. And we'd love to understand where you're coming from on this topic. So we're going to conduct a short poll. So Brian, if you would go ahead and launch that poll. And would tell us about your concerns and why you're here today. The poll question, hopefully you'll see it shortly. If you can pick your top 3 issues for what your concerns are about the using IFRS for SME standard as a basis. So I can't see the poll, but hopefully others can. Can somebody, is the poll visible? I can launch the poll. There we go. Right, can you see the poll now? Hopefully get some thumbs up. Okay, great. Super, we've got 25 respondents so far, so more of you can put in there. Up it comes, 35. Karen, can you see the number of people that have responded?
Yes, I can. Yeah.
You can, super. We're approaching 50. We've got a bit of a range there, so we'll give it another 5 seconds or so. Okay, I'll end it there. Is that okay, Karen? Over to you.
No, that's fine. Great, thank you very much, Sam. And really interesting to see the range of results that people are showing, opinions that are there. There are some sort of clear front runners in here about concerns about it being designed for for-profit entities and therefore not relevant for non-profits, and the complexity that are in the standards. Interestingly, a couple of people think that it might be too simple for NPOs. Concerned about how widely it's known and about the cost of adoption and education and training. So I think those are probably the ones that are largest there, and there are some commonalities in what we're seeing. So I'm going to stop sharing that and just move us on to what we heard in our consultation feedback. Just trying to move my slides on. Apologies. Okay, so in the consultation paper, as you know, we propose using IFRS for SMEs as the foundational framework. And we did ask specifically what challenges people saw with using IFRS for SMEs. And respondents shared concerns about the cost of adoption, which you've just said, the need for education and training, potential complexity, particularly with the use of fair value measurement, and the increase in volatility of profit or loss, and the potential for tax implications. There was a separate concern about whether public accountability for non-profits is compatible with IFRS for SMEs. In other words, the concern that IFRS for SMEs has been developed for profit-making entities, again reflected in your results. Some respondents felt that IPSAS standards should be used as an alternative because the IPSASB conceptual framework aligns more closely with the objectives of the projects and this project and the characteristics of NPOs. From a stakeholder perspective, feedback included concern about the acceptability of this approach to donors, as well as comments about the need to demonstrate the benefits of the model to different stakeholders. Some respondents also raised points about the challenge about how to integrate different principles and guidelines to produce a coherent framework for NPOs, bearing in mind that IFRS for SMEs as the foundation framework is the start point. And when it came to comments about addressing NPO specific issues, there was a real range. At one end, some pointed out the risk of specialisation for NPOs when it's not needed. In other words, they didn't support unnecessary departures from existing international standards. But at the other end, there was concern that NPO-specific issues may not be tackled if we use a for-profit framework as a start point. There were also practical questions about what the guidance would comprise and cover. Would it be a set of interpretations? Would it be a standalone document? Or would it take the form of annotations to the IFRS for SME standard? There was feedback about a need for greater clarity of the target audience in terms of who this guidance is being written for, and the feeling that this would enable a sharper focus on user needs and preparer capacity. Some suggested the use of tiered reporting, and others were concerned that fragmenting the guidance between simple or complex NPOs might weaken the model, and I'll come back to that in a minute. So that feedback shares many similarities with what was in your poll results, and I'd like to try and dig a little bit deeper into that before we go into our rationale. So going back to the top issues that we saw, which was around it's designed for full profits, it's too complex, the cost of adopting it and understandability. Could I get your thoughts on this? I kind of like to try and unpack it and get your contributions to that. So perhaps anybody who had those in their as their sort of top issues, perhaps you could share why that was the case. If you could put your hand up to contribute. If you're not comfortable with doing that, perhaps you could put some comments in the chat, and Sam will monitor that. Unfortunately, I can't. I can only see the screen in front of me. So Sam, perhaps you could pick up anybody who would like to contribute.
Sure, no one's put their hands up yet, but if you want to just share one of your concerns, one of your reasons, Pablo is there. So as Pablo's done, if you press reactions, there's a raise hand button at the bottom. You can do that and unmute yourself to speak. Thanks, Pablo. Fire away.
Yes, hello everyone. I'm Pablo Martin from Argentina. I'm glad to be here. Actually, I didn't find the option that is I'm okay with IFRS for SMEs. That the only one I found this was I am okay with the IFRS for SMEs and find out more.
Okay.
That was the best one. Actually, I am convinced that I'm and this, please, it's a personal opinion. I'm fully convinced that IFRS for SME will be a good tool for us. Because we will rely in the robustness of the standard setting process of IFRS Foundation. They have a lot of tools for training, videos, everything that will be very easy for us to facilitate. Already the accounting profession all over the world, 6 million of accountants, 150 institutes all over the world will be ready to help us spread. And many charities and non-profit organizations already are involved in IFRS since they are linked to a mayor. I say that Vodafone Foundation, Telefonica Foundation, etc., already they are within the IFRS environment. I know it's tough. I know it's prepared or thought in a for-profit organization, IFRS. However, non-profit organizations can, and I need to be good to make profit. The thing is that they cannot distribute profit. So at the end of the day, the framework will be acceptable, in my opinion.
Thank you very much.
Thank you.
I can see Shane Ambrose. Do you want to come in?
Thanks, Sam. Apologies, folks, if I turn on my camera. I'm afraid I'm going to lose my connection. So I'm speaking from Ireland this morning. So I suppose just speaking to the question, I suppose it's fair to say that the conversion of a standard can be quite difficult and complex. And in this regard, I suppose organizationally, we had the experience a number of years ago where we had the changeover to FRS 102 in Ireland and the UK. And the full compliance of that with the SORP, which is the accounting regulations in Ireland and the UK for charities, and just the volume of work and effort that required for us as an organization was quite challenging. And I suppose I'd be a little concerned for smaller sized NGOs and MPOs, the implications of moving to an IFRS based standard, which they may not be on already, could be very consuming of resource, time and effort, which, you know, small to medium sized MPOs may not be able to deal with. And I think it also raises it does speak as well to the tiering question. I'll wait to see what you guys come back with on that this morning. I think the tiering question is an important thing. Speaking from a national experience here in Ireland at the moment, we have recently introduced regulations for legislation around the regulation of charities and set up a charity regulator. And this whole issue of the tiering with the existing accounting rules in Ireland is a hot topic of discussion. And as it stands, we have, legislation going before the Irish Parliament at the moment, which is introducing this into the existing legislation. So translating that to a wider international focus, it would be, I suspect, an issue across many countries. So so from that point of view, in principle, as Martin said, that you have to take a basis somewhere. So I suppose if you're going with an international standards, an IFRS starting point would be okay, but it would probably have to be severely adapted for the NPO sector. But that's the point of this morning's conversation.
Thank you.
Brilliant, thank you, Shane. Then before I give you Karen to respond to those, Karen, if that's okay, there's a couple more in the chat that would be good to speak to. A couple of people have asked for examples of jurisdictions that use IFRS for SME, sort of how widely is it used, which I think you might touch on later. And another question, which is, have we spoken to non-profits that have tried applying IFRS in the non-profit context? So would you like to speak to both of those, Karen?
So yeah, and I will be picking up on those in the presentation. The UK and Ireland, just as was being spoken to just then, use IFRS for SMEs as the basis for a standard called IFRS4NPO in the UK, and that is based on IFRS for SMEs. And the regulation for charities in the UK and Ireland builds off that particular standard. So there is an example of using that, but there are also examples of using other international standards as the basis as well, which I'll come to in a second. So hope that helps, hope that's useful. Sam, shall I move on? And I think we may return to some of the points that have been made in the questions a little bit later once I've gone through the explanation, because they may answer the questions that you have raised now, or they may not have, and it will be interesting to see that whether we have addressed the points that are in your heads at the moment. Sam, are you okay with that? Is there anything else pressing that you want to pick up at this point?
Absolutely, go ahead. And I think, as you say, I think some of those questions will be answered as we go along. So if they're not, do feel free to come back later. Okay, super. Go, Karen, thank you.
Oh, so excuse me a minute. I just need to move us on. Okay, so what we're going to look at is that first question about who is INPAG for, who is the guidance intended for, and also going to then look at why international standards and how we've reached the proposal that IFRS for SMEs should be the foundation. And then finally, we'll look at what INPAG might look like itself. So to the first question, and it is a question we frequently get, is about who is the guidance intended for. And honestly, we find that quite a tricky question to answer. Literally because of the diversity across jurisdictions as much as anything else. And it was mentioned earlier that in the feedback to the consultation paper that respondents were seeking greater clarification about who the guidance was for. It is this tricky question because it will be up to each jurisdiction to decide exactly who which NPOs should apply INPAG. But in developing the guidance, we have a view on who we think might most benefit, and I'm hoping that this visual will help explain that. We recognise that there are many very small NPOs, and in this visual, we represent these as tier 3 entities who we see as micro NPOs. And we see the users of their financial reports likely to having simpler needs and the cash basis of reporting could be sufficient for these types of entities. We see, though, that the guidance could be useful as an NPO grows, or if an NPO wants to start the journey to accrual-based information. At the other end, we recognise there may be some NPOs that have more complex needs. This might be because they hold the funds of service users or have debt that is traded on a public exchange. And we've represented these as tier 1 entities on this visual. For these NPOs, other international or national accrual-based standards could be needed to meet all of their reporting needs. We would still expect that the guidance to be useful to this group, but it might not in itself be sufficient. So we see INPAG benefiting most the remaining NPOs, and we've described these as tier 2 in this visual. They are NPOs that need to track assets and liabilities and report on a range of transactions and activities to meet the needs of the users of their financial reports. And so we're designing INPAG with these NPOs and the needs of the users of their financial reports in mind. So I hope that helps explain the intentions, but as I said, it will be for each jurisdiction to determine how they want to apply the guidance. As Sam said earlier, the guidance is needed now. And developing a brand new set of standards for NPOs is just not feasible within the timeframes of the project. IPSASB, the Public Sector Accounting Standards Board, has spent more than 20 years developing standards for the public sector. And that, just to give you some sense of how long it takes to develop international standards. So we concluded that we must draw on existing frameworks to develop this guidance. And we looked at both existing international guidance as well as national guidance. A number of countries have developed NPO-specific standards for use by non-profits in their jurisdictions. And we found that national guidance tends to be built on standards being used for the private or public sectors, and sometimes both. And it's designed to meet country-specific contexts, which take account of their local legal requirements, as well as community expectations. And so we've seen that national guidance can be built on international frameworks or local GAAP. And that means that that guidance can vary on individual topics. And while national guidance has been developed through local due process with well thought through positions, it's not been considered outside of an individual country's context and hasn't been through international due process. So using a framework that has been through international due process and has an accepted conceptual base is likely to increase the adoption of it internationally. So jurisdictional specific frameworks, we determined are not an appropriate base, as they are aimed at providing reporting solutions to meet the needs of their individual jurisdictions and are not subject to full international due process. But as I said earlier, the national frameworks can be based on a variety of bases, and certainly in the UK, it is based on IFRS for SMEs. So having concluded that international guidance would be a better base, we then looked at the 3 international frameworks, the suite of international financial reporting standards, IFRS for SMEs, and the suite of international public sector accounting standards. So these frameworks have been developed over a number of years with independent standard setting boards. IFRS and IFRS for SMEs have been developed for for-profit entities, with investors a key user of their financial reports. IFRS for SMEs is a simplified form of the IFRS suite of standards intended for the larger number of smaller entities that do not have shares or traded debt on public exchanges. IPSAS have been developed for public sector entities with citizens and those that represent citizens, such as MPs, as the key users of their financial reports. They're not the only users, but when we talk about IFRS and IPSAS, these are the user groups that are often thought about when talking about the differences between the 2 sets of standards. IFRS and IPSAS are each underpinned by their own conceptual frameworks. And these conceptual frameworks are largely similar with many concepts in common. Aligning with IFRS has been a key pillar of IPSAS development, so that activities that are treated the same are treated in the same way. And there are clear advantages of using common global reporting approaches where that is appropriate, and that is the key point. And although none of these standards are developed with NPOs in mind, between them, they do address many similar issues. And so by using one of any of these frameworks, their hierarchy structures and legitimacies would provide credibility to the guidance that we want to create for NPOs. So to determine which one of the frameworks might best meet the objectives of the guidance, we established 3 criteria to evaluate them. The first criteria was whether the framework addresses NPO-specific issues, and in particular, does it provide solutions to common issues? Does it provide solutions to a range of issues? And are those solutions practical to be implemented? We looked at familiarity that non-profit organisations might have with the standards and how easy they might find it to use the framework. And this looked at how many countries use the standards, and so it might be acceptable, the frequency of changes to the framework and the understandability of the principles. And finally, we took a look at the feasibility of producing guidance within the project resources and timeline, taking into account the resources that would need to both develop and maintain the guidance, and of course, the ability to complete it within the project timeline. There was no clear winner. No single framework performed well across all of those 3 criteria. IPSAS performed better on NPO-specific accounting issues, where there are similarities with certain transactions with NPOs. IPSAS has got standards on non-exchange transactions that deal with donations and grants, and also assets that are held for social benefit rather than for revenue generation. But IFRS for SMEs performed better on ease of use and feasibility, primarily because it is a single standard intended for use by a variety of bodies. It also has removed some of the complexities associated with full IFRS and IPSAS reporting. It's shorter, simplified standard with reduced disclosure requirements, and it's updated only periodically, unlike IFRS and IPSAS, which are under constant review. Many countries use IFRS for SMEs, so it may have some acceptable levels of familiarities amongst regulators, preparers, auditors and users. So in summary, IFRS for SMEs would require the lowest level of initial and ongoing resource to develop and maintain it, so it's more feasible, and it has many advantages in terms of ease of use. So as a consequence, we proposed IFRS for SMEs as the foundational framework to give it a stable base. But as we know, that doesn't fully address NPO-specific issues, and we fully acknowledge that. And for that reason, we're also proposing to draw on full IFRS and IPSAS and their conceptual frameworks. And we're also proposing to make use of jurisdictional level guidance to develop NPO-specific solutions. And this approach means that we can use the most appropriate elements of existing guidance without starting from scratch. And putting it another way, that means we don't have to reinvent any wheels as we start this process. There is a risk that using different sets of guidance may lead to inconsistencies, but there are many conceptual similarities, as I said before, between IFRS and IPSAS. And in developing the guidance, we are framing it around the users of NPO financial statements and putting them in the fore as we develop the guidance. And in this way, like IBSASB, we think we can make adaptations or provide guidance that meets the needs of non-profit organisations. So what does this mean for what the guidance might look like? So in starting, we'll start with IFRS for SMEs standard as a start point, as it covers a wide range of transactions and activities that an NPO might be involved in. We will create new material to cover NPO specific transactions not in IFRS for SMEs. We will also modify some sections as need be and provide additional NPO specific guidance. And we'll take anything out, anything that is clearly not relevant out of the guidance too. We'll be focusing on the topics prioritised through the consultation process, and that will influence which sections within IFRS for SME standard that are going to be within the scope of the first stage of this project. So that means we're not going to be addressing every section in IFRS for SMEs. And where we're not addressing a section or a topic, the standard provisions of IFRS for SMEs will apply. But we may look to make some terminology changes so that the full guidance makes sense and is available to NPOs all in one place. In terms of that proposal, we just to take you through some responses from the consultation. 94% of respondents either agreed or partially agreed that international standards are the best starting point for the guidance. There was strong support for the evaluation criteria, with 85% agreeing with those. And 91% agreed with the assessment that we made in the consultation paper. So very strong support for that. Those that agreed said that they supported the proposals because the frameworks have been developed through extensive consultation and best practice, and that there are advantages in leveraging what has already been developed. They also said that there's some practitioner familiarity, including with funders, as well as there being freely available educational materials, which is an advantage. However, it's fair to say that this was not universally held, as some respondents felt there would be a need to educate some stakeholders and that familiarity with the standards did not exist everywhere. Some respondents noted that some jurisdictions have further developed with national solutions and that these solutions might not be transferable internationally. At least one respondent felt that in developing the guidance, the discussion should start with the characteristics of NPOs. And that's consistent with the views expressed that for-profit frameworks do not have the same focus on accountability and decision-making that's needed for NPOs. And they pointed out that these exist in Ipsos. There was also the comment that the project should ensure that the accounts are suitable for the primary users of the financial reports, which would be different to all of the existing international frameworks. A couple of respondents cautioned on the need for the guidance to be proportionate. But to summarise, the response that we heard was that the approach was a pragmatic response to the project resource and time constraints, but that an entirely new framework or the use of Ipsos might be preferable. To mitigate concerns, we're going to be doing a number of things. We're going to be framing the guidance around the primary needs of stakeholders, and we're absolutely going to be putting them at the heart of our thinking. We will be using Ipsos where it provides the most appropriate reporting solution for NPOs. We'll look to leverage that. We will focus on keeping it simple to make the guidance as accessible as possible. And we'll continue to work with donors and other stakeholders to increase their understanding, but also to get their input to the project so that we can look to make sure that we have solutions that, as far as possible, work for them too. We will provide training materials as part of the project implementation to support those materials that are already available, which, as I said earlier, do exist in the context of IFRS for SMEs. We'll also ensure that it's clear which organisations we have in mind in developing the guidance. So Your thoughts on what I presented earlier would be very helpful in that regard. But importantly, we'll keep listening to feedback, such as the concerns that have been raised around the volatility in profit or loss, as well as tax implications, and consider these in developing the proposals. Those are issues that we've heard of so far. No doubt we will hear of others as we go through. One issue that I haven't addressed faced on is the cost of adoption. And it is true that there will be cost, potentially for regulators, NPOs and auditors. And to be straightforward with you, we as a project do not have the resources to meet all of those costs. And indeed, one of the advantages of using IFRS for SMEs is the possibility of building on existing resources and familiarity, which we think will reduce the cost of adoption. But we think the long-term opportunities that will arise from moving to INPAG will make the short-term costs worthwhile. Creating that level playing field that Sam talked about earlier has got to be something that we all aspire to. So our focus will be on ensuring that with the IFRS for SME standard as the foundational framework, we provide a standalone set of guidance that makes appropriate use of all of the frameworks to provide NPO specific reporting solutions. So IFRS for SMEs is not effectively a straight jacket that we're going to live within. Before we close with a final poll and discussion, we'd like to just look ahead to the next phase of the project, which is about developing the draft guidance. We're going to be developing the draft guidance through 3 exposure drafts. And the timeline shows that we hope to issue the first of these later on this year. But there are some critical dependencies, particularly with the current revisions to the IFRS for SMEs standard, that mean that the plan is subject to change, but that's what we're working to currently. Each exposure draft will cover different content in the proposed guidance. And broadly speaking, the framing issues will be in the first exposure draft, accounting treatments in the second exposure draft, and presentational aspects in the third exposure draft. With each exposure draft, we'll make it clear how the sections will be presented and how it will fit into the structure of the final guidance as a whole, so that you can see how that is unfolding. And the plan is there will be a 4-month consultation period after each exposure draft, and during that time we will hold webinars and receive written responses from stakeholders. And of course we'll be continuing to learn from your input as we go through that process. So I'd like to check in with you again to find out how what I've said has landed. We have a poll to assess whether we've answered your questions and whether there is further information that would be helpful. We'll then have some time to look at those responses and deal with any comments and questions that you might have. So Brian, could you launch the final poll, please?
So I was wondering, Karen, if we might just do a couple of questions and comments first, and then
absolutely. Yeah,
there's at least one that's in the wings, and there might be others which would be better to do before the poll. Mark, if you want to come in, Mark Jerome, put your question, and then if somebody else has one that's still hanging, please raise your hand and we can bring you in.
Okay. Thanks, Sam. Can you hear me?
Yes, I can. Yep, very well.
Oh, good, it's working. Good. So the question, I've got 2 questions I've raised. One, there are already some not-for-profits which are using full IFRS, and I was just wondering if anyone's spoken to them and whether they know how they would feel about going from full IFRS to IFRS for SMEs. So that's the first one I've got. The second one, which I raised recently, is IPSAS, or the, I'm not sure if it's SASB or IFAC, have produced a very useful but very detailed guidance of conversion from cash-based accounting to the full IPSAS. And I'm just wondering if it's something like that we could use, or either as it is or adapt for not-for-profits. As basically it looks a bit threatening at first because it is so detailed. It's basically it's a large book, but it's because it goes through step by step very clearly exactly what needs to be done in every aspect of a set of financial statements. Yeah. And so the work's been done by SASB, and it would seem a shame not to use that and build on that for the not-for-profit sector. Over.
Thank you very much, Mark, for those questions. To the first one about those non-profit organisations that are using full IFRS, my expectation, and it may be a false expectation, is that those organisations that are using full IFRS are doing so because they are deemed to be a publicly accountable entity as defined by the IFRS suite of standards, which generally means that they've got something that's being traded on a public exchange, or they've got responsibilities, fiduciary responsibilities to those to whom they're providing services. And in the pyramid that I presented, those would be the ones that I would call the tier 1 entities. And so I would expect that those kinds of entities would continue to follow full IFRS, but could use the INPAG guidance to help them with non-profit specific types of accounting issues. So that's my assumption around that. If that's not true, I'd welcome people to contact us and let me know whether that isn't the case. Of course.
Can I add on a little bit onto that, Karen, when you're done with that particular question before you move on to that?
And of course, as we have said, that in terms of how the guidance is applied, that is going to be a jurisdiction specific determination in any case. So each jurisdiction will determine whether a non-profit organisation would use a full suite of standards or whether it could use INPAG instead. So we're trying to create it as a part of, for those bigger organisations, a resource that can be drawn upon, but it will be for each jurisdiction to determine. Sam, did you want to come in on that?
Yeah, thanks, Karen. So you mentioned about there might be larger organizations that are applying IFRS. I've also seen, I'm obviously based in Uganda for 20 years, have seen quite a lot of what's happening in East Africa. I've seen many NPOs, large and small. So I could take, local organizations and something as big as, for example, CGIR, the big international research organization. They've been applying IFRS, and they're desperate for something that's sector specific. It's been a struggle. It really has been a struggle. And what we're seeing is a lot of appetite for sector specific guidance, especially in countries that don't have something that they can apply. So the only option is IFRS or IFRS for SME. But even in Uganda, where it's allowed to use, we see many organizations don't use it because their auditors don't recommend it. So I've seen lots of NPOs using IFRS. On one level, we're learning from what they're doing, and we're getting good feedback and specific input from those organizations of what has been easy or difficult. There's also, I think, a lot of experience in Australia where they've sort of adapted IFRS and are using it in a non-profit context. So there's lots of feedback that we're getting from different users around the world. In general, I would say there's a lot of appetite that sector-specific guidance is really needed. So this is what I wanted to add. So Karen, do you want to move on to some of the other questions?
Yes, thank you very much. Just to your final point about the IFRS guidance on moving from cash to accruals. I think generally as part of the project, we will look to leverage the resources that are available. When we get to the point of looking at what guidance might be helpful in moving towards impact, we will absolutely be looking at the resources that are already there and looking to what extent we can recommend that people either use them directly or that we look at how that might be adapted to be useful for non-profit organisations that are moving to accruals. So absolutely we'll be looking to that.
I think there was a slide I shared earlier, which is our sort of long-term vision. So we're in stage 1 now, which is something for tier 2 organisations. In the future, maybe it will be, we don't know what the priority will be. Maybe it will be going for tier 1. Maybe it will be something that's suitable for tier 3. But it's hard to do a transition process or a map of moving from cash to accrual if you don't have the accrual standard there as the endpoint for the map. So it's one of the reasons, and we've had a lot of conversation about a cash basis reporting standard. Yes, it would be useful, but we need to start. We need to start with an accrual-based standard, and then in future a cash one that can then provide a bridge and a transition sort of map in the same way that IFRS has provided. So yeah, great points. It's just that we can't do everything at once. And Meti has put a question in here. Well, first of all, let me respond to the question about which countries are using IFRS for SME. I have put a link in the chat to the web page on the IFRS website, and it shows all the countries. It doesn't give a number, but it's lots and lots of flags. You can scroll up and down, and there's lots of countries that do allow or require the use, or mostly allow the use of IFRS for SMEs. Then there's a question here. Don't you think getting all relevant standards from both IFRS and IPSAS is appropriate to accommodate the needs of all stakeholders of NPOs addressed in one report? So rather than do something small and cut back, why don't we just do something that could work for everybody, cover everything, so we have the full IFRS and IPSAS covered? Karen, I'll let you answer that one.
So I'm not sure I've quite grasped the question, so apologies if I'm not answering what you're trying to do, your point here. I mean, I think in terms of the approach that we are adopting, we are looking to use all of the standards, but you kind of need to have a foundational basis on which to build. And we've selected IFRS for SMEs because of the advantages that I outlined. It's a single standard, it's simplified, it's suitable for a variety of entities, it's fairly stable. And IFRS for SMEs is based on and aligned with the conceptual framework for the IFRS for suite of standards. And that in itself is very similar to one that is used by IBSASB for the development of IPSAS. So yes, there are differences between them, but there's also a lot of common ground. And I think we want to kind of maximize the use of the common ground so that we're not doing something unnecessarily, because many transactions are similar, whatever part of the economy you are operating in. But we do want to kind of be able to use IPSAS and IFRS and sort of national guidance to try and help us create something that is going to be of the most value for non-profit organizations. I don't know if that's quite answered your question on this. Perhaps you could clarify, that would be helpful.
Okay, we've got some other things that I'd love to other aspects in the chat. Also, if you'd like to open your mic and put a question forward, please raise your hand. Meanwhile, I'm going to address some of these. So Shane has asked, in terms of interest in the project from donors and regulatory agencies, what's the interest? Super important question. So we have set up a donor reference group. The details of the members are on the website. It includes governmental donors like FCDO, that's the new DFID in the UK, and USAID, a number of foundations. Very actively interested, let me say. Our next meeting is actually on Monday, looking at, we have already looked at, how do donors use general purpose financial reports? what are some of on Monday, we're looking at what are some of the key figures and ratios that they would be interested in being able to glean from general purpose reports. There is generally, I would say, a real appetite in the sector for harmonization, for making things easier for NPOs. There's this, you know, all this talk about localization that's very prevalent and overdue. I think this project is something that they see that can help create a sort of infrastructure for the sector that they can align behind, and I think that's very positive. It's early days. There's no solutions yet being lined up behind, but in terms of interest, very strong. Regulators, it varies a lot by country. There's a few countries that have been very engaged, others not yet, but that's certainly part of our strategy. We have country champions in 30 or so countries right now, and one of their key roles is to engage their sector regulators because they're key for adoption. So that's certainly part of the strategy. There's another question here about the ACCA companion guide, which was excellently developed by ACCA back in 2015 by Richard Martin, among others, and Nigel Davies, actually. Absolutely, that's been a core reference point for us as we were drafting the consultation paper and coming up with proposals. And we've been working with the authors closely as well. They're involved. I don't know if you want to say anything else about that, Karen.
No, I just completely agree. That has been used as a resource in working out what the issues were and how they're being dealt with. And interestingly, Nigel Davies, who was a co-author of that guide, is now a member of our practitioner advisory group. So we're very much looking to access those who have been active in this space and have thought about some of the issues and the solutions to be part of providing information to help us develop solutions for the project.
Great. So in our final minutes, if you have another question, please do type it and we'll see if we can answer it. But I'd love us to close with a poll. 3 questions. Are you better understanding why we're using it? Do you feel your concerns are understood? And what can we do to, what would be helpful? So please have a go with that. And if you've got anything else you'd like to add in the chat, please do so in our final minutes. Brilliant. 35. Let's see if we have a few more responses coming in. Just give it. All right, I'm going to end it there so that we can end on time. So I'll end the poll and share the results. There we go. Karen, do you want to?
Yeah, no, I think you've all been very kind and nobody has said no. So I'm glad that many of you feel that you better understand why IFRS for SMEs is being used. Still some uncertainty out there, and of course we will continue to build on that and continue to have the conversations to help you all better understand. In terms of concerns being understood and can be addressed, you're all very positive about that. So 2/3 of you think that they can be, and 1/3 of you expressing hope that they can be. But I'm delighted that you have some confidence that we are listening and taking on board your concerns and trying to address them. In terms of what would be useful to you going forward, so we've got a set of frequently asked questions that we can make available. Is the top response that you've had, as well as technical updates in the newsletter. 50% of you think that would be useful. And then thirdly, links to educational material about IFRS for SMEs. I think given the resources that we have as a project, we'll prioritise those. So good to see what the top 3 are there and look what we can do going forward to support those. That's really helpful takeaways for us. So thank you very much, and that will help us inform our next steps. I'm glad that that it seems that what we've said today has been helpful, and I really do hope that it's helped to clarify why we are taking the approach that we are, and that you found it interesting and helpful today. So I'd just like to finish by thanking you all for your time. Please do keep in contact with us. We do value the input that you provide, the questions that you ask, to make sure that we are hearing the concerns and issues to give us the ability to respond to those. So if you haven't done so already, subscribe to the news letter, and do please email us, and we'll look to respond to any questions that you have. Sam, any final word from you?
You've said it all. Just to say thank you so much, Karen, for this really excellent presentation, and thank you everybody else for coming. Next one, see you there.
Thanks very much. Thanks everyone. Goodbye.
Thank you.